MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor at WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk to you. It's been a real interesting year so far. I mean, the S&P has gone up. Everyone in the United States is talking about that, but gold has gone up too. And your listeners know about gold, but people here don't. But I think it's really the place where the opportunities are going to be going forward.
Is it because the rise in gold has been quiet? It's not like a huge jump of $50 or $70. It's $5 or $6 at a time.
Yeah, that really does have a lot to do with it, and I think that tells us what is kind of going on with it. First of all, gold is still below last year's highs, around 1360. And really, a market has to go up to new highs and then go up another year and so forth for the masses to really get interested, because really, it's higher prices. They like to chase stuff. We saw that with Bitcoin, of course, but also with stocks like Apple. I mean, Apple has been the most widely owned stock in the United States because it just went up for so long, and people like that. They like to buy whatever goes up year after year after year, and that's really what it's going to take to bring more and more interest into gold. But that steady move up has been very interesting because as it's happened, I've actually seen a lot of skepticism among gold experts about it, that, this is just like the move last year, it won't last, or it's got to correct one more big time before we have a sustainable rally. And so far they've been wrong in calling for big drops. And it really reminds me of when I first got interested in gold and mining stocks, was way back in the first quarter of 2002. And at that time, gold was under $300 an ounce. And it was basically doing this, going up very slowly in the gold stocks too. And no one where I live in the United States knew anything about gold, but the experts at that time were also very skeptical of it, that move would be sustainable. And it took the break through 300 to get the real interest going. And then gold, of course, went up for years from there, of almost 10 years. But the huge move, in my mind, was into the 2008 crash. Then we had, of course, a giant pullback. But I see the moment now is very similar to what I experienced in 2002, where it's very stealth, move up, and people aren't really that excited. And one thing that was happening then that is happening now too is the move is really being led by the big cap mining stocks, ones paying dividends such as Franco-Nevada, Royal Gold, which report earnings today, and so forth. And the small cap juniors and exploration stocks, they've come back up a little bit in January, but they're certainly not having explosive moves. They're lagging, and I think that market is really a sleeping giant. Now, in 2016, we saw them go up, interestingly enough, for a couple months, very sharply, many of them, most of them, doubling in like 8 weeks. And I think something like that is going to be ahead of us. Now, one thing about the juniors is last year, when gold had a sharp pullback in GDX and the big caps in August, the juniors, interestingly enough, barely pulled back at all. And then in December, most of them had a little bit of selling hit them. And that's kind of typical of them, actually. If you have a sideways year or a slightly down year in gold, the juniors tend to actually dip in December for tax loss selling purposes and then come back up in January. So that's basically what they've been doing. But in 2016, they really started to take off when gold went through 1350 up to 1400. And I think that's what's going to take a repeat of that, gold going through the 1350 level. And I think when that happens, we'll start to see the juniors really start to move and run, because what happens is simple, higher gold prices make mines that are dormant right now or need more money to be open, attractive. And that's what makes the stocks go up. So right now, I think we're really kind of in the first inning, I think, of the gold bull run. I think this one's going to last for a very long time. And the second inning, I think, is going to come when gold goes through the 1350 level. Right now, it's gone up to 1330, basically, and we're in a pause period. It could last a couple weeks. In theory, it could even last a few months. I really take things 1 week at a time, and the pause just started last week, basically, when we went through 1300. A lot of people are predicting we would drop from 1300, but instead when the Fed met, we smashed through it. That's a sign of positive strength. And that's kind of what happens when gold has one of these steady moves up. You have quick pullbacks, but nothing really big. And that seems to be really what's happening. We're pulling back off 1300. We've tested basically 1300. Yeah, it could go down to 1290. If it does, it's really no big deal. And if you want to look at the gold stocks too, the GDX ETF that has the big caps in it, it's really looks like it's consolidating, with support around 22, maybe 21.5 and resistance at 23. And it could sit here between those two levels, for a month. And if it does that and then breaks out, it'd be doing it coincidentally with gold attacking that 1350 level. But to make a long story short, I think we're in a pause period, consolidation in gold stocks, the big cap gold stocks and gold prices and silver prices. And the next move, the next rally, when it starts, I think is when we're going to start to see the juniors really start to participate. And that's one of the things I'm mainly looking at now as a great opportunity to figure out which are the best juniors to buy over the next couple weeks and position ourselves for that next move when it does happen. Because you got to think ahead of time. You got to do your research ahead of time and be ready. And that's how you don't chase things, but you buy and then let the prices go up and let others chase. And that's how real money is made in these markets. And frankly, your show, your guests, the website HowStreet.com is a great resource because it covers so many different mining stocks. And I'm not really the expert on individual mining stocks. I'm more of a big picture person trying to figure out when these trends are changing. So it's time to enter that sector at the right time, and I think we're approaching that time.
Is Palladium going to be part of that big march?
Yeah, in some of the big Palladium mines actually look like they're in the same position as gold stocks. So definitely Palladium looks interesting, and so does copper. And the copper stocks are slightly following the big cap mining stocks. For instance, Rio Tinto has pretty much very similar charts to Newmont, Franco-Nevada, and the other big cap miners. But you look at the price of copper, and it's at 285, right around it, and that looks like a big resistance level, just as the 1350 level is for gold. That 285 is resistance last year, July, this year in October, November, December. So I think we base there and then go up from there. And the Palladium chart is very similar. I'm trying to load it up as we're speaking so I can give you the exact price point to be looking for. But when I was looking at the other day, that it's pretty much an identical chart as copper.
Is platinum still in the same range as well?
Oh yeah, platinum is too. And the thing is, there's several, the mining companies. They basically mine all three of them. A couple of them in Africa. So all this stuff kind of moves together. And really, platinum is sort of a byproduct of silver too. So the big silver miners are part of it.
We'll have more with Mike Swanson right after this.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Welcome back. We're speaking with Mike Swanson. Mike, what do you think is going to happen with uranium?
Well, uranium is kind of dependent on what's going to happen with nuclear power plants and so forth. The thing about the uranium sector is there's only a few producers. So you have Cameco, for example, and Cameco's been acting very well. Cameco just made a new 52-week high last week. So I think the sector as a whole, the stocks in it are good buys. The challenge though is like I said, there's only a few producers, so most of them are very speculative, and the simplest thing to do in my book is just buy Cameco to play that sector. I mean, there's an ETF URA, but the biggest holding is Cameco, and all the rest of them are pretty much small cap speculative stocks.
Transports quite often are considered a good indicator of what's going to happen with the market. What's happening with transports?
Well, they got hit very hard, of course, even worse than the Dow did, and they're bouncing with the stock market. You can look at the Dow Jones Transportation Average. However, they're still lagging. They fell more than the Dow on the downside, and the bounce is weaker on the upside. So they're not confirming the Dow. If you apply Dow theory, they're supposed to both trade strong when you're in a bull market. And if they're both trading weak, you're in a bear market. The Dow's managed to get above its 150 and 200-day moving average. So if you apply Dow theory, the Dow looks okay, but the transports do not. So that's a big warning sign. However, that said, interestingly enough, there are some transportation stocks that are outperforming the stock market, even with what I said about the Dow transports. And those are ones that are paying big dividends. So there's some railroad companies that are actually paying big dividends and trading near 52-week highs. So there are some opportunities there, but as a whole, the transport index is flashing big warning sign. And so are stocks like UPS, FedEx, which said that global growth and their earnings are going to be weak. So they're big warning signs, I believe, for the global economy, for the American economy, for the path ahead. Maybe not for next week, but I take what they say seriously.
Have these tariff wars helped at all?
I don't see how they have, but they haven't obviously been a disaster for the financial markets or for the global economy. And, they've caused harm to farmers, of course. Eventually they'll cause rising prices in the United States at Walmart and places like that. But we're kind of in a lull period. It appeared like we were going to have a big trade war, and Trump basically backed off in December. They were going to institute a doubling of the U.S. tariffs against China unless China agreed to import more goods and stop stealing technology and change their entire industrial policy. None of those things they have done. And instead of slapping on the increase in tariffs, they basically did a lull, a ceasefire until March the 1st. And there's no sign of any real agreement coming. And today it came out that they are going to not be able to come to an agreement because there's simply not enough time. That's the news story today, reported to CNBC or leaked to CNBC. And it appears that the most likely thing that's going to happen is another ceasefire announcement in the beginning of March. So it doesn't appear there's going to be any resolution. It doesn't look like Trump really has the appetite to increase these tariffs. So I think the issue at this point is going to become a bit more symbolic. I guess the drop in the stock market last year spooked Trump from really going on with aggressive tariffs like he was talking about. And we're kind of in a limbo. Today's news, hit the stock market, but not enough to really break the rally that began in December yet. I think we're going to see the market roll over in a couple weeks or a couple months, but we're not at that point yet, and the market's likely to drift for weeks before it does roll over. So everything is kind of in a low holding pattern. Gold is consolidating its gains, while I think the stock market has to form a top and probably drift before it rolls over too. So as far as the markets are going, not much is really happening at the moment, and the news stories are just having temporary impact. And I think that's the story with the tariff news today. Just a temporary hit that the market will probably shake it off and try to ignore it, because really nothing meaningful is happening there too. And maybe in the end, the whole tariff war, so to speak, will be more symbolic than real, much seems to be when it comes to American politics nowadays.
We'll have more with Mike Swanson right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, there's some talk that the U.S. Federal Banking Committee will allow federally regulated banks to finance the marijuana business. Is that good news for marijuana stocks?
Yes, it is. And it's a positive sign that in time there's going to be more and more states accepting the sale of medical marijuana in the United States, which will help these companies expand. And, these companies are having another nice run. So if there's any sector of the stock market that has the potential to have more of a speculative run, besides gold and mining stocks, I would say it's marijuana stocks. Stocks such as Canopy Growth, which is at 25 in December, it's come back. And it's pausing and consolidating, around 52 resistance, 45 support. And it's in a position where it could consolidate for another week or two and break out and have another run. And we do seem to have positive news flow. So if people are looking for a sector to trade this month, that's probably the best one from a momentum standpoint. There's some definite interest there. Now, I believe these are stocks to trade and not invest and hold for years. I think the gold stocks are ones to invest and hold with a time frame of 2, 3, 4, even 5 years. I don't believe that's the case with the marijuana stocks, simply because they've already had a tremendous run last year. They have high valuations if you look at things like the price to sales ratio. But from the short-term standpoint, that's probably where the action is going to be. And the stock market, likely not rolling over and beginning a big drop, at least this month, also enables them to have a kind of a positive environment where they can have a speculative run, because there are people that want to trade and buy things and are looking for the stuff going up. So that's what they're going to look at. And American investors are willing to play the marijuana trend. That's something they definitely understand and are ready to get involved in and have been getting involved in. More and more stocks are getting dual listings in the United States. And stocks like Tilray, when it gapped up, it fascinates people. It shows them high prices can happen in marijuana stocks. So they get ready to try to buy the next thing to try to get involved in that sort of action again.
Also, the edibles market, Coca-Cola is interested in talking about it. Pepsi is not. Does that kind of show what corporate America is like right now, still split on marijuana?
Yeah, I think so. Another example of what you're talking about is Philip Morris. It's trying to inch its way also into the medical marijuana market or cannabis market. And, you know, it's the biggest tobacco company in the world, so that's a huge sign right there.
Anything else you wanted to throw in today, Mike?
Well, the other thing I should say since we last talked is the big news item, maybe of the year, is the Federal Reserve leaked out that they were going to end their so-called quantitative tightening program sooner than they were planning. This means that the Fed will stop reducing its balance sheet, and they didn't really provide details of that at the Federal Reserve meeting. However, the Fed said that if, the stock market has another decline or there's another recession and they raise interest rates to zero, the next move will be a return to quantitative easing, a return to bond buying. And I think that news, it caused gold to go up that day. But gold went up for several more days and did not immediately sell that news. And that type of news is a sign that we're really at the end of the monetary tightening cycle. And I think that's what's going to provide the positive backdrop for gold going forward. But, there's not another Fed meeting till March, so maybe then we'll get more details.
What would that do to the value of the U.S. dollar?
Well, I believe it would really hurt it because last year the U.S. dollar actually rallied from April up until December just about because at that time the Fed was tightening and if you remember in September they even talked about tightening 4 times going forward. Then of course had to back off on that, but they were the most hawkish, aggressive Fed bank, major Fed bank in the world when it comes to raising interest rates. That was helping the dollar go up, and they've abandoned that policy basically. So in time, I think that will hurt the U.S. dollar. The U.S. dollar did pull back to its 200-day moving average, where it's bouncing off of that. Just as gold is attacking resistance at 1350, the U.S. dollar is attacking or dipping to support. So probably when the dollar breaks 95 will be when gold breaks 1350, and that would signal a big rollover in the U.S. dollar and a massive top having been formed over the past 5 months. So I think that's really going to be the story of the U.S. dollar this year, and will help the Canadian dollar go up and other currencies go up, because last year really the story was the rising U.S. dollar, and I think we're going to see the story be the opposite of that by the end of the summer when it comes to the currency markets.
Mike, thank you so much for chatting with us.
Thank you. Great talking with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. You're listening to HowStreet.com Radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.